when you take away all the indicators, when you take away all the bells, all the whistles, all the flashing lights, all the buy and sell signs, when you take away all that and all you have is price, your trading will start coming together easy because you will start to understand price, reading price. Now, show me the low that you think is a safe low. I'll give you 2 seconds. Now type in the comment what low you think is a safe low. And I'm going to tell you which 2 are safe. If you choose A, you are wrong. If you choose B, you're correct. And let me show you why. This is all about liquidity, by the way. Now, just imagine the buyers coming in the market here. Forget about the right side. Think about here. You're trying to buy the market here, right? You're going to put your stop loss. What do the textbooks say? All the course that they sell, it says put your stop right below the last low. And what happened? Your low get eaten up by B. This guy right here. This is me. Okay, that's you and this is me. This is professional traders here at B, and that's you, A. So your stop loss get eaten up. Now look at C. Same thing. The textbooks say you buy. Look at this trend line. Oh, this is so sweet. 1 touch, 2 touch, 3 touch. I'm gonna buy right here. And my textbook say put my stop loss right below the last low, which is C, and my take profit is gonna be 3 to 1. What happened? You get stopped out by D, by me and my professional traders. Friends, why does this happen? It happens because liquidity. The market don't go anywhere without liquidity, and you have to understand liquidity. Like I said, if you don't understand liquidity, the chances that you are the liquidity.